Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Silver is exploding. Precious metals have caught the eye of not only investors, but people that have never invested in their life. Now, it's extremely easy to understand, to see that silver price is rising, but it's not so easy to understand or know why. So today's video, we're going to be diving deep in the world of silver and really see behind the scenes what's going on to cause prices so bullish. So before we start, make sure to smash the like button. Let's put a 400 like goal on this video. That is the highest I've ever asked in a video, so I definitely think we can reach it though, especially with all the support lately. And if you do if you are interested in more of the monetary or the financial aspect, subscribe to my second channel, Silver Slayer 2, where I dive more into that side of things. This channel is primarily focused on precious metals. That channel is more from our financial system and a monetary standpoint. So with that said, let's jump in today's video. So silver explodes, but why? The silver market witnessed another explosive day. I swear every time I check the gold and silver markets in the morning, they catch me off guard again. It never stops. At midnight in London, the price of the metal was $26.90. By 9 p.m., it had rocketed up to $28.95. That's a gain of 7.6%. This is not normal. And not only is this not normal for any investment, especially for precious metals, which is a slower paced investment. For stocks, stock markets have a lot of volatility, Tesla, Google, Apple, or even Bitcoin, but for gold and silver to be performing like this, it's extremely abnormal. But then again, we are not in a normal world. The Republicans are spending like drunken modern monetary sailors, and there's some chance that their even bigger spending rivals will be in full power after the November election. The deficit is now likely to be $6 trillion. The risk of holding dollars or its derivatives such as a pound, euro, yuan is rising, and the return for taking this risk is falling. So it's logical that people turn to the monetary metals. The price of the dollar is now at a record low, 15.17 milligrams of gold. This is mathematically equivalent to saying that the price of gold is $2,050, but economically it is quite different. We are insisting that the declining credit of the Fed be measured in money rather than the other way around. Imagine if people went around saying that the meter stick is 47.2 gummy bears long, an hour is 20.0 pop songs in duration, a pound is 2 sacks of feathers heavy. Anyways, it's obvious that the dollar is at a record low price in gold terms, because many people realize that the government is abusing its credit and simply don't want to hold its debt paper. However, when priced in the other monetary metal, silver, the dollar is far from its record. It's currently 1.07 grams of silver, but in April 2011, it was 0.63 grams. Silver was $49.21. So more speculation. See, I've talked about speculation in the precious metals world and how this S word is starting to become more apparent, starting to rise more in the precious metals world, which is scary. It's scary because precious metals have intrinsic value. They have real value. So there shouldn't be much speculation in these markets. For something like Bitcoin, speculation is key. That's what pushes prices higher. Even fiat currency, the dollar isn't backed by anything, so the dollar is solely based off of speculation. The dollar's value is based off of how many people think that dollar is worth something in terms. And if they have faith in the dollar will rise. If they lose faith, the dollar will crash, and that's exactly what we see happening now. Other countries opting out of using the US dollar as the world's reserve currency. So more speculation. Some speculators are betting that if the dollar can make a record low in gold terms, it could do so in silver terms as well. If gold should be $2,050, then why shouldn't silver be $52? That would give us a gold-silver ratio of 41, which is not extreme, right? Historically, it's been much lower than that. If the ratio moved to the opposite extreme from its March high, from 31, then at $2,050 gold, silver would be $66. In other words, the price would be more than double its current level, assuming that the price of gold did not budge during such an epic event in silver. And that's something you got to think about. If silver does rise that high, gold is going to be rising as well. Yes, they have different markets. There's different things that affect the price of both of those metals, but they still move somewhat together in correlation because people that invest in the silver also invest in the gold or vice versa. So we do not offer this as a prediction, just food for thought. When markets get to moving, they can keep on moving longer than anyone would expect and move farther even when there are no fundamentals to drive the move. That's something that is, see, this is what I say, speculation can be good, but it also can be bad, right? Bitcoin speculation was good, it was short but sweet, and then it turned bad. That's what I'm worried about precious metals. Right now, speculation in the precious metals world can be good, right? It can be good, but in the long term, I definitely think it can hurt the markets. I don't want the markets to move off of people's perspectives. I want the markets to move off of solely supply and demand, or things that actually matter, that are actually affecting it in the everyday world from an industrial standpoint or a monetary standpoint, not from people's opinions. So check the fundamentals. Are the fundamentals of silver waning? Let's take a look at the August 6th intraday fundamentals as shown by the silver basis overlaid on silver prices. So in phase 1, we just have a falling basis while prices is rising. That is falling abundance of silver. Even though it's becoming more expensive, this means people were buying metal, not futures, the physical bullion, which is extremely important, which I always push on this channel. If you can't hold it, you do not own it. Remember that. During phase 2, we see the classic pattern. After the peak in price in 2011, price moves with basis. The correlation is uncanny, which means that the moves both up and down, with 2 exceptions when the basis dipped between 9 and 10, and then again at 11 through around 12:30. After that, the price continues to run up while the basis falls. The basis is cut in half during the day, starting around 2.8% and ending around 1.4%. That's a meaningful drop in the abundance of silver to the market while the price moved up $2. So what do? Yesterday we said, this is not the same market as 2012-2019 stack on. Today we say it again. This manic rise in the price of silver will end someday. But to quote our old friend Aragorn from Lord of the Rings, today is not that day. And that's something to remember. There's not always a perfect time to buy, sell, or trade. Just because you got a paycheck or you get a nice stimulus check doesn't mean that's the right time to buy your silver. Holding is a word that's extremely overlooked. Sometimes the safest, smartest, most profitable solution is holding. If you would hold that stimulus check for a couple months or a couple weeks or whatever time period it is, and you bought silver or bought into the markets when there was a small dip or a small correction, it could pay off a lot more handsomely. So what do we do? So let's look at gold. Here's a chart showing basis and prices from July 21st through August 6th. We see a similar pattern as in silver. The price runs up from around $1,800 to $2,050, while the basis runs down from 2.25% to around 0%. There are even a few hints, dare we say, of backwardation. So this is the October basis, so it's might early to be plunging into temporary backwardation just yet in early August. Gold is scarcer. As its price runs up, backwardation in gold would be a very serious development. We'll keep an eye on it. Meanwhile, monetary metals clients will continue to earn a yield on their gold and silver paid in gold and silver. So I really enjoy this. I really enjoy this article. Because it really does explain what we need to know in what's happening, especially from a chart. You know, if you can incorporate what's happening from the chart standpoint, you know, even if it's someone explaining it, you know, the patterns or the formations, as well as tie that into what's happening in the economy, then you can get a very, very, very accurate educated perspective on where prices not currently are, but also are heading. And with that last article, it really shared where prices are also heading, and it's looking like it's only going to go up. So silver markets have been volatile during the trading session on Friday, initially spiking towards the $30 level before pulling back. In fact, we are approaching the end of the session. We are below the $28 level, meaning that people that bought at the top are now feeling that heat. This is a market that will continue to see more gravity take place as it had gotten far ahead of itself. So that they're saying it kind of pushed up too fast and people kind of don't know what to do. Remember, we buy precious metals that you are essentially buying or selling like the US dollar at the same time as they are priced in currency. That being said, if the US dollar strengthens a bit, it makes sense that precious metals may suffer, right? The dollar index is extremely opposite of precious metals. If the dollar index is high, precious metals are low, and it goes the same way. If the dollar index is low, precious metals are high. So if the dollar strengthens, precious metals may feel some of the heat. People might get a little scared. So all of that into account, you got to keep in mind the Federal Reserve is going to continue to print greenback, and that works against the value of the US dollar. The more money we pump into the system, the more oversaturated, the more undervalued the dollar becomes, which in return is going to boost precious metals prices. You got to remember this. Look at the volatility. Look at the inflation rates. Compare that to gold and silver prices over a period of time. It's a direct correlation. So anyways, I hope you enjoyed this video. If you thought this video was educational, informational, or at least just entertaining, make sure to smash that like button. Let's see if this video can get 400 likes. Once again, thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.